Good morning, and a very warm welcome to all of you to this discussion by Friends of Europe on shifting investments for a green recovery. My name is Dharmendra Kanani. I'm Director of Insights here and your moderator for this one-hour debate with you. Warm welcome to our Zoom audience. Just for those of you who are not that Zoom savvy, which I'm sure most of you are, make sure you're on mute. And then if you would like to ask a question, raise a point, please make sure you use your virtual hand, raise it so that we know to call you in. Those of you who don't know where your virtual hand is, go to participants and you'll find it there. And we look forward to welcome you in this discussion as we go along. I also want to warmly welcome our live stream audience. Those of you who are watching on live stream, those of you, please, you can also ask questions, pose queries, or make comments. Make sure you use our Twitter, which is hashtag Friends of Europe Debate, to pose your question, and we'll take you accordingly. This debate comes at a really interesting juncture, and it was an interesting time for Europe. This week, we've heard the President of the European Commission set out one of the most ambitious recovery plans in the history of Europe. Europe will become one of the biggest debt issuers in the world. We are using the largest amount of taxpayers' money for the recovery from a crisis that has given us a kind of a hit from the left field. And all the plans we had for climate change have almost changed fundamentally and been upended because of what's happened. So we're almost having to repackage or remake our flight whilst we're airborne in terms of anything we're planning to do. What we do know is that we need to make sure that we cut emissions by 50% or more in the next 10 years if we stand a chance of meeting the 1.5 target on temperature. We know this month and last month and the past 4 months, we've had the hottest weather ever in history all over the world, and we have things raging all over the world which are climate related. And not least, people forget, actually, the virus crisis has a climate related starting point, if you like, in terms of our relationship to biodiversity and other matters. Today, we have a range of speakers for you. As ever with Friends of Europe, we ensure that we bring a cross-section of society in terms of key influencers and policymakers and decision makers to debate this issue about shifting investments for a green recovery. We have the European Climate Foundation, so we have someone from the outside in looking at what needs to happen. We have the private sector in the shape of NL. We also have the European Commission and the European Parliament. So I warmly welcome all our contributors to this debate. And don't be shy, do engage. I know it's early morning. I hope you've all had your coffee or tea or whatever, so that we can engage in an interesting debate that has to happen, because fundamentally, we know money matters, but it's about how that money is spent, which is going to be key. I want to first start with Astrid. Astrid from the European Climate Foundation. A warm welcome to you, Astrid. Tell us, from your perspective, you've been involved quite heavily working with the Commission and others in the sector to think about the right pathway and the right types of investments. We have the plan set out this week. Tell us, from your perspective, what needs to happen in the next 12 months? Because the next 12 months are quite critical in terms of getting the new EU-owned resources, getting the money agreed and then implemented, knowing that most of the money will be shifted through existing programs. So Astrid, over to you. What needs to happen in the next 12 months?
Good morning, and thank you very much for inviting the European Climate Foundation to this important debate. So as you already said, we are experiencing the consequences of climate change around us. And in this context, Europe really has the historic opportunity to lead the world in demonstrating that an environmentally and socially recovery is possible. So environmentally and socially sustainable recovery is possible. And I believe we are really at a crossroad. Either we live up to this challenge or we fail future generations. As you already said, we have had the high-level announcements so far. We have, a resounding commitment to the European Green Deal as the framework for Europe's recovery. We had this week the Commission President's announcement that the EU's 2030 targets should be revised to reach at least 55% emissions reduction. the European Council in July has adopted a historic 1.8 trillion EU recovery budget, and that includes a historic 750 billion next generation EU recovery instrument. And we have had the announcement that at least 30% of this historic package is dedicated to climate action on average, which actually means higher shares in some of the financial instruments. And we also very much welcome the announcement by the European Commission this week that 30% or 200 billion of the 750 billion instrument will be raised through issuing green bonds, which will be quite a landmark transaction for capital markets in Europe. We also have the commitment from the European Commission and the European Council that the key funds of the package, such as the Just Transition funds, cannot be spent on fossil fuels to avoid unsustainable lockings. In addition to the Council institutions, the European institutions, we have the European Investment Bank that is demonstrating strong leadership in transforming itself into Europe's climate bank through its 50% climate finance target, its fossil-free energy lending policy, and its commitment towards a Paris-aligned climate roadmap. And even the ECB president has publicly raised the need to integrate climate change considerations into the ECB operations, while we have yet to see action. And last but not least, we have had very strong voices from progressive business calling for a green and sustainable recovery, including investors, but also corporates. So what needs to happen over the next 12 months? We really need to ensure that now we move from the good announcements to credible implementation. So at the EU level, the high-level announcements I mentioned need to be anchored into the legislation at the level of each financial instrument to ensure credible implementation. So this means mandatory climate action targets in all of the financial instruments of minimum 30%, but on some of the instruments that means a higher target. And we heard the Commission President setting out 37% for the Recovery and Resilience Fund and plans. We also need a credible tracking methodology for this climate action. And at the European Climate Foundation, we believe that the EU taxonomy is the right methodology to track that funds are being spent in line with the EU's 2030 targets and 2050 net zero commitments. And we need do no harm principles to be ensured in legislation as well through exclusion lists that also exclude fossil fuel activities. And this is particularly relevant for the Recovery and Resilience Fund as the largest financial instrument in the overall package, as well as the Just Transition Fund, because we need to be sure that we invest today in the low carbon economy that creates the sustainable jobs of the future and that does not lock in unsustainable activities of the past that stand a strong risk of becoming stranded assets. At member state level, then, we need national recovery plans that really build the sustainable economy of tomorrow. And this is possible. The European Climate Foundation has recently financed a study by EY that has identified a pipeline of over 1,000 shovel-ready green projects across the EU 27 member states. This is for a total investment value of over 200 billion euros. It could create over 2 million jobs, and it has the potential to avoid over 2 gigatons of CO2 emissions. And this list of 1,000 shovel-ready projects is just a fraction, we believe 10% on average, of the green projects that are actually under development in Europe. This means that the entire EU pipeline of green investment opportunities could be as high as 1 trillion euros. And these opportunities exist in all of the EU 27 countries, including in Central and Eastern Europe.
Oh, good. I'm glad you said that. I was going to ask you that. Okay, go on, carry on, sorry.
And just to, as a final thought for this introduction, in addition to, making these investments happen, we also alongside need to put in place the regulatory frameworks across sectors to accelerate the systemic change that we need. And since I'm looking at this from the financial sector, I very much welcome that the European Commission is keeping its sustainable finance agenda on track alongside the crisis recovery measures, and is really providing an opportunity through the renewed sustainable finance strategy that is coming out later this year to catalyze transformative shift in financial flows. And we can do this, for example, by anchoring mandatory disclosure of sustainable risks and impacts in disclosure frameworks, in mainstreaming the EU taxonomy and also including a non-sustainable taxonomy in the package, in making sure that capital requirements for banks and insurance companies reflect actual climate risks and have a penalizing factor for polluting investments, for example, and also in making sure that the sustainability preferences, for example, of retail investors will be taken into account. So a lot of work is ahead of us, but I'm optimistic because we have the right announcements, but now we need to move towards implementation.
Astrid, thank you. So, we've had the statements, we've had the commitment, and you're saying that a key facet of this is making sure that this gets turned into mandatory procedures, to make it mandatory through legislation, regulation, etc. And you say there is a pipeline of job-ready, investment-ready projects across Europe, including in the East, which is really, really important, because actually we know politically that there's going to be most resistance to making this shift in those fossil heavy or fossil using countries in the East and Central Europe, where there's a sharp politics there in terms of how do you make a just transition there, so that we don't get caught in another kind of trap. You're the European Climate Foundation. How confident are you? What's your sense there that, given the experience you've had to date, that we'll get that shift in the regulation that will take place? Because it'll have to happen pretty quickly, no? For this to make it kind of move in the direction. What's your sense as an independent organization outside looking in of the sense of confidence we have that this will happen and won't get caught in politics? I'm not asking you to be a soothsayer, because obviously you can't read the political narrative. None of us can. But what's your sense?
Well, I have to be optimistic because we have no choice, and I think
Okay.
I think there are reasons to be moderately optimistic at this point. As I mentioned already, both the European Commission and the European Council, for example, have called for a fossil-free use of the recovery package, which we very much welcome. And as the legislation moves forward, I think what we need to do collectively as a community is to explain the opportunities to all the people involved in the legislation, including parliamentarians who, have of course justified fears for certain transition regions in Europe that have to go through major structural changes. And I think it's a question of helping them understand that actually we can make the shift from, coal to clean energy, for example. The economics are already right, and these are sectors that create tremendous jobs going forward. Another sector that has a lot of potential is the building sector, for example. The EY study I quoted has shown that the building sector renovation is an opportunity that has the highest job intensity going forward. So I think it's making collectively sure that the opportunities are understood. And then I do think that we have a fair chance of getting where we need to get to on the legislation.
Thank you, Astrid. I think we'll come back to some of the points, and I'll turn to our next speaker very, very briefly. But there's something that I think that you touched upon that we're all going to have to get right or be mindful of, is the narrative for this change, especially for those people who are going to enter the the unemployment market for the first time in their lives. We're going to see the biggest economic hit in terms of what happens to communities that have been already divided, but also feeling the sharp edge of unemployment and no income. And we're going to have public services that are going to be hit because we've got the largest public sector debt ever in history across member states. And making that narrative work for the ordinary person on the street to understand actually we're going to put money here rather than there is going to be key. And I think we'll need to turn to some of this in a moment. I want to turn to a private sector perspective. Alberto, thank you very much for being with us here. You're the Chief Financial Officer at Enel, and welcome. From your perspective, Alberto, what needs to happen for us to move in the right direction to make sure that we have a sustainable finance market? You're a very large company. You operate both globally and in Europe, but you will be one of the key targets for this in terms of shift, but also a leader potential in this whole move towards sustainable finance. Over to you, Alberto. You're on mute, Alberto. It's bottom left of the screen. There you go.
It's going?
It is. Welcome.
Okay, thank you. Sorry, I had a little technical problem.
Not at all. It always happens to all of us.
Okay, thank you very much for having invited us. And I'll take only one minute to give you a short story of Enel, because I think it's useful for what I'm gonna say. Enel is a multinational power utility that until 2015 was in a reducing margins and rising debt with a previous traditional model. And at that time, we decided to turn completely our business strategy in a sustainable business model. And we put sustainability at the core of our strategy. Results after 5 years is that today Enel is the world leader in terms of industrial size, financials, and is the second company in the world for market capitalization, moving from 35 billion with 2015, 80 billion today. That's the value of sustainable choice. And we think that, so we are working on this to show that these choices are economical choices first. And we think that only if all the companies will make sustainable choices, not only sustainable projects, but sustainable strategies, so everything can speed up and reaching the targets that we have on sustainability. And the company today invests roughly 10 billion euros each year. I would say 100% that now we are applying taxonomy on our investment plans. But I would say that at the end, we will stay in a very, very high level, if not 100% of our investments are within the sustainable choices. Why I'm saying this? Sustainable finance is one of the two legs for companies to work in sustainability. One is finding the way to increase the profits and reduce risk. That's the way in which a private company works within the investment committees and when they decide to do investments. The second is the sustainable finance market. It has some problems today, and I think that Mrs. Marta and the effort that I heard the EU Commission will put in pushing ahead the sustainable finance market is vital for the sustainable growth. Sustainable finance is in size is little today. It accounts 2% of the overall bond market, and is too focused on very, very few instruments. Green bonds is, I would say, the only instruments today that is in this market. We started issuing green bonds, and I think it's a very, very important instrument for a certain type of companies. Companies that have not already decided to have a full sustainable model, business model, but have decided to do some project within sustainability. When it comes to different companies, and I think we need that all the companies will be different very soon, choosing not sustainable project, but sustainable strategies. A sustainable finance market will have to change. We innovate in this. We issued a new instrument. The instrument was named SDG Link Bond. Today, other two big companies has followed us in this path. And so now the name is Sustainably Linked Bond. But the structure is the same. The very difference is that these instruments are going to finance strategies and not projects. It's based on strong and certified KPIs on a strategy. And the very difference is that projects will not give any sign that a company is moving towards sustainability, while sustainable strategy based on solid profit and risk curve will so assure market that so a company is focusing on this. And we got a big discount in our issuing versus a normal bond, something that we didn't achieve with issuing 3.5 billion euros of green bond, because sustainable strategy are the core of the change that we have to endorse. So if I, the question you made me, I think three relevant things. Companies will have to strongly put sustainability at the core of their business choices. I think that on you is a very, I agree, it's a very, very, very epic moment. I think that we can re-put Europe at the core of the world development with these choices on pushing on sustainability as a core of the perspective for the next years. I think that on sustainable finance, we need to have a more wide approach on instruments. Mm-hmm. And on the other side, it's very relevant that the EU purchase program will endorse all the instruments that we think that might be useful to reach the same target. And on the other side, I think that all the effort we are making in working with the European Commission on the recovery funds and all the funds available for this effort, it might be something useful also to try to think if some subsidies and help can flow to the sustainable financial market, to try to help to rise the sustainable financial market with a very simple thing, making it so efficient, also using some little subsidies if it will be needed, to have companies looking at the IRR and cost of capital going down, and for this way deciding to issue new instruments, and through these instruments to make new investments to speed up the development, the sustainable development of Europe.
Okay, what you're saying, and all that you're saying is incredible for a company that's leading the way, and you're clearly looking around you and saying who else is following and who else is there that can build this momentum, and we need more instruments in the marketplace. Absolutely, and that's the case, because green bonds aren't the panacea. They're not the silver bullet on their own in their own right, but we need other types of models, but also instruments. What's your sense of the kind of response you've had from the European Commission to some of the proposals you're putting forward? Bearing in mind that, you've made that, you're on that journey. There are many large companies in Europe, across the world, who haven't, let's say, bought the ticket or the narrative or the story, because they see their bottom, their bottom lines in a very different way. Give us a slight response to the response you've had from the Commission and what you'd say to some of your colleagues in the private sector.
I think Commissions is doing everything. I think it's a moment in which the discussion is very open, because I think all together we are inventing a new world. So it's clear that it's a very, very topic moment also in discussion. Mm-hmm. Now we are then some specific proposals that we are pushing are now, we are about to discuss deeply this. One is what our seed proposal is exactly. So what we said, why don't subsidize a little bit and so create conditions to increase demand and offer on sustainable finance. If sustainable finance is linked to sustainable investments, we think it might be relevant not only to sustain investment directly, but also sustain indirectly the sustainable finance market that will then flow through a huge level of investments. So I say we have a lot of interaction, and I think, as I said, I think we are really in a topic moment, and the only point we ask is to hear companies and different companies. So because there are not one instrument for all, and the companies are in different stage of development, and the only way to have then companies that after the stimulus will still invest in sustainability is that along this period they will find, so the normal things that we look at when we decide on investments going for a long time, not only in the time in which stimulus and subsidies will stay. And the only way is that sustainable choices are the best choices for companies to see a profit and to see at risk. On the other side, I say yes. So I'm also I'm proud to be the co-chair of the United Nations Global Compact CFO Task Force.
Okay.
We are working on this exactly, and it's clear that in the world, not only in Europe, you have companies at different stage of development in this field. Companies that are starting now, others that don't believe in sustainability, others that are well developed. So it's a path, and but talking about the economical speaking, we have to be sure that all the choices will point to have company more solid and more profitable. That's the discussion we are doing. Then we are gather experiences around reporting, around impact thesis on sustainable investments, and around sustainable finance markets.
Okay, thank you very much. I want to, it's very, very useful, and we'll come back to that in terms of, I think there's a kind of a real politics around greater subsidy, especially when we've had the largest bailout of the public and the private sector in history since the financial crisis. But let's move, let's bring some people in from the audience, because I know that we've had quite a interesting contribution from both of you so far. And before I bring in the European Commission, Artur, to respond to some of the questions and issues that you've both posed, I'd like to bring in some of our people on the Zoom audience. We have Ursula. Ursula, where are you? Ursula Woodburn. Hello.
Hi.
Hello. Please, a warm welcome to you. Introduce who you are and what your question is, please.
Hi. So my name is Ursula Woodburn, and I'm the head of EU Relations for the Corporate Leaders Group Europe at the Cambridge Institute for Sustainability Leadership. I think obviously a lot of the research shows from previous recessions and so forth that it's absolutely clear that the green investments offer the immediate economic, social, environmental benefits, including high quality and more resilient jobs. And all the research we've done has shown that. So I think there's no doubt that this must be the way that we go. And actually the business supports this, you know, as per our letter that the letter that we led and was sent to Ursula von der Leyen, and showed that more than 150 companies, including Enel, supported the increase in the 2030 framework. I think the question really is about how we achieve this now. And I heard what Astrid said about some of the points around the sustainable taxonomy. We do absolutely need clarity. And I think the question is, what is it now that we can do to build this green pipeline? Some of them have been identified. So how can the Commission and business work together to really develop and enact a green pipeline of different types of projects? Do we need more technical assistance from the Commission to help support that? What are the things that we can do to really put this into practice? And also, when it comes to finance more broadly, how can we make sure that we crowd in the different types of private finance, and that we use all these different exciting new funds, and we can use additional private finance to really build a large amount of potential investment.
Sure. Ursula, one of the things
private finance, and how do we build the technical assistance?
Okay, Ursula, one of the things that I'd like to raise, I mean, you might want to think about and perhaps post a comment on, is that what we do know is that all the things you're saying are absolutely right. But what we've learned from the crisis is that we haven't really got a very good infrastructure to go from top to bottom in terms of governments making a choice and a decision, and for that to be actually enacted on the street or through public services. And we don't have the infrastructure to be able to do what some of you have described. And we're almost as if we need to invent a new infrastructure so we're able to get job-ready projects and make them work, both with the private public sector working together. And I think that's one of the biggest challenges surely we're going to face as we move forward. I want to take the next question from Gernot Strub. I hope I've pronounced your name right.
Yes, Gernot, based in Munich. I am the leader of McKinsey's Global Capital Projects and Infrastructure Practice. So
I need you to speak up a little bit more, if you can, please move closer. Thank you. Hello, welcome.
Hello, good morning. Can you hear me now?
Yes, thank you.
Very good. Gernot Strube, based in Munich, and I'm leading McKinsey & Company's Global Capital Project and Infrastructure Practice.
Okay.
So very close to the topic, both
Indeed.
from, let me say, built development, but also industrial development. I wanted to get to a point. First of all, I think it is very exciting to have this discussion, very timely, and also great to see leaders like Enel. I think we are moving in the right direction, and I think we need to just massively accelerate that movement and get it much broader. My question really is, we said we have a lot of shovel-ready projects that are pointing in the right direction. I think this is great, and I think we need to get going. We had the Global Infrastructure Initiative Summit, and I think there was an important point made to say we also need to be careful that we don't, especially now, with the COVID-19 situation also impacting our projects, that we don't jump too quickly on the shovel-ready projects, but make sure they're shovel-worthy. I like that term very much when it was made, because if we now sink our resources into projects that are marginal in impact, I think that could be very risky. So the question I have is, in this list of projects, do we have more projects requesting support from the financial market and in the European Union, or do we still have more available resources from the financial side than projects? Because I think it is very important to, first of all, get a full pipeline, and second, to also raise the aspirations in terms of what is truly shovel-worthy.
Okay, thank you very much. And we'll come back to that, and but from some of our earlier speakers also. But let's move to Artur. Artur, a warm welcome to you.
Thank you very much.
Thank you for joining us again, and a good friend of the house, we've been on panels before. So thank you for representing the Commission's view, which is a huge and tall order. Artur, you've been in this game for a long time, and you've been someone that has been heavily involved in this agenda around sustainable finance. And there's been a grand plan over the past 18 months, let's say, on sustainable finance and how we move. And suddenly the crisis comes and whops us in the face and pushes off kilter. And we've had, as I said before, the biggest proposed injection of cash and taxpayers' money. Is there a trade-off now between a green transition and green recovery and an economic recovery?
I think that...
Tough question, I know.
Of course, the answer is a no. But if you do it wrongly,
really?
the answer is yes. So I think that is as simple as it is. And I think the issues have been mentioned. In particular, I think Gernot was pointing to the fact that we talk here about the economic recovery within the next months. So that is what people are expecting in Europe, the citizens all around Europe, those who are fearing for their jobs, and also the enterprises who are fearing for their enterprises. And that must be delivered by the green recovery. So we really need to look for those opportunities. So the shovel-ready projects that were mentioned, one will have to go through them in order to see which are the ones who will also help us in the short term. And I think that is the reason the Commission has come, and Ursula von der Leyen was very clear with these kind of 7 lighthouse projects that were mentioned, because these are the areas where we believe we are going to exactly get to that end, that we will have in the short term demand for products, for services, getting people back into the jobs, getting the economy out of the recession in the coming months, because that's the main task. And at the same time, lay the seed and the foundation for the longer term recovery, what Gernot was calling the shovel-worthy projects they need to be. Just to give you that example of the renovation, what we are really interested in the Commission is what is called the deep renovation, because what we see in reality is that, yes, there is renovation happening, but it's not going to go deep enough. And deep renovation means that you not only look at the insulation of the house to change the windows, no, you also think of changing the heating system in order to have it reducing the CO2 emissions. So it's the old oil heating system that needs to go out, and the modern one needs to come in that links it up to renewable energy. And thirdly, it's getting to the smart home. So also the digitalization. And that gives an incentive, and it gives a stimulus to very different industries across the board. In one case is the construction industry, in the other case is a lot of the manufacturing, those who are active in the heating and cooling systems. And thirdly, also when it comes to digitized services, digitalization. And in that way, you are going to create broad growth, and at the same time, you move forward into a green recovery that is going to get us to the minus 55% in 2030, and by 2050 to climate neutrality. So I could go now one by one through those 7 lighthouses, but I know we don't have sufficient time to expand a little bit on how that is going to work. The difficulty will be which projects are really shovel ready. And I think that is what we will see in the coming months, because this is all going to happen at a very high speed. The member states are expected to present their plans within the coming months, and the earlier the better, because the earlier we will be able to mobilize the funding. We will have in the Commission a very short period of time to look at these plans in order to see whether they meet those criteria. And then it's also not only about the projects themselves in terms of where you invest the money, but it's also looking at the regulatory system, because this is about, on one side, investment, and on the other side, also about reforms. And there is many projects, I think, we have been looking through over the past years where we can improve government spending, where we can also make sure that we send the right signals to make sure that money is being spent into sustainable finance and into sustainable projects in the future. Kind of one thing that springs to your mind is always, how do we tax energy, for instance, today?
Yeah.
It's very clear that reform needs to be done in order to make sure that the right signals are being sent out.
Arthur, give us just very briefly, there's 2 points. That thing that, I mean, it's responding to Alberto's point at NL about we need to perhaps increase the level and type of subsidy to motivate and incentivize the market on a more sustainable footing. But also, give us, and very briefly again, give us an example of a lighthouse project. What does that mean? Is it a collection of initiatives? Is it a city? What is it? What is a lighthouse project?
I think if you're, and let me go further on the renovation. So what we could see as a lighthouse project, what a member state could propose is, for instance, a financing facility that is going to be given to the banking sector in order to finance deep renovation and to help to get money into that system. And that might require a certain amount of subsidy in order to make sure that this is going to be a deep renovation. So these are the things that are going to be possible. The same you can think of renewables. there might be still a certain amount of subsidy that is required, particularly if you want to link the renewables, for instance, to the hydrogen economy. We know that this is not a project running on its own. So there will have to be a certain level of subsidization. But we will have to be careful in terms of how much we give in terms of subsidy, but because what we also want is to make sure that we drag in as much private finance into these lighthouse projects as possible. So we spend as little public money and as little subsidies as necessary on them. It's not about crowding out private sector, it's about crowding in private sector.
Okay, all right. Thank you. Very, very interesting points that you've just made. I want to reinforce to people on Zoom, make sure you use your virtual hand if you want to ask a question or raise a point. We don't have much time left. I'm going to move straight on to our parliamentarian. Irene, very warm welcome to you. Thank you for joining us, Irene. So, you know that I've mentioned this already earlier about the fact that this is the largest cash investment of taxpayers' money. As a parliamentarian, but also, as we know, you're one of our alumni of the European Young Leaders Programme, an EYL of the past, that Parliament's going to have a tough job and should be standing up to this tough job because it is the largest use of taxpayers' money. And I think citizens won't be forgiving if they see money not going that's going where it should. So how do we get the governance right and ensure a just transition?
Thank you. So first of all, thank you so much for having me. As you said, I'm, attached to Friends of Europe for, I've been part of the community for a long time, so I'm particularly happy to be here. Parliament has always been pushing a lot. There is a very high degree of involvement, sensibility towards these issues. This is why we push so much for, putting in place the standards and the regulations like the taxonomy that could help us create a convergence and create a market for sustainable finance. And right now, Parliament is also trying to, influence the regulations that come with the Next Generation EU and some of the instruments now we are working on the recovery facility. So we try to make sure that really there are the criteria for evaluating the projects, for giving out the money, will be related to our, sustainable objectives. Of course, then the national plans that will implement, that will actually spend the money, they will be evaluated by the Commission, and that we've been complaining that Parliament will not be involved enough in this evaluation. We would have liked to do so. We keep pushing, trying to have a bigger role. However, whatever the outcome on the final governance of the process, I'm quite confident that, especially after the speech of Ursula von der Leyen, that the Commission, who's the one responsible for evaluating the national plans, that they will keep the highest standards in making sure that all this money, with taxpayers' money, as you said, will go to support the transition. Now, the other problem, the other issue that you raised, how can we make sure that this is a just transition? This is another topic that we often discuss in Parliament, because transition is, can be painful for many. So we know that we want to move towards a green economy. We want to penalize the brown activities, but sometimes, let me put it quite bluntly, the brown economy still employs hundreds of thousands of jobs. And it's not that easy to convert them, to reskill them, to make this transition. So what we're trying to do, for example, devote resources to support this transition, support the reskilling of workers, so create incentives for industries to create, to do this transition, also through subsidizing activities of, to move towards greener. So this is what the RRF is also about, what the Just Transition Fund is about, to create incentives also, as you mentioned, for Eastern European countries that are more related to older forms of energy. And the other thing that I would like to mention here, we also need to act on a different front and support, for example, the establishment of a carbon border tax that will not only provide own resources for the European Union to keep financing projects, but will also create, protect our industry in this process of transition against those countries outside the European Union, which may still export to the European Union, not respecting our standards, but still creating emissions and pollutions that we don't want to. So I think there are several things that we have to do to make sure that we provide incentives for the transition to compensate the industries, and not only the biggest ones. So we've heard some of the large companies, for them it's been relatively easier to make this transition and to make the investments. We need to involve the small medium enterprises as well, and I know that the Commission is thinking about that, and in the new strategy that will come forward, that we need to protect somehow. I mean, of course, the European Union is an open economy, should remain so, but something like the carbon border tax will help our industry to make this transition without unfair competition from outside. So there are several things we have to do, and this is what Parliament is working right now and pushing Commission and Council to move. So I hope in 4 or 5 minutes I managed to provide.
You did. You did. And I'm so glad you mentioned SMEs, because one of the key issues here is that, we know Europe relies on its economic growth currently on SMEs. They are the bulwark of the European economy. And there's very little mention of their circumstances and what they will require to make this transition, especially in Central and Eastern Europe. So I'm glad you made reference to it. But can I, Irene, if I can just pause on you one more, pause on you for a little bit longer, but also that question of, do you think there's a need for a new kind of governance structure within the Parliament to make the accountability work, or will the current processes work as, do you think they're going to suit what's required, given the size and scale and scope of what's going to happen? I know that's a highly political question, but don't dodge it. Say, give me your honest view, Irene.
My honest view is yes, we wanted to be more involved, especially in the evaluation and in the monitoring of the national plans. We've, keep asking this. We know it will be hard. We've been negotiating, but we know it will be hard. But this is something that will have to be addressed in the future. Parliament has shown a vision, a long-term vision for the European Union. Parliament has shown how bipartisan and the consensus can be at the political level for green transition, sustainability, both environmental and social. So Parliament is ready. We can do that, and we really would like to be more involved in these kind of activities. Following up, monitoring, making sure we do the evaluation.
So, well, okay, let's hope the European Commission's listening, especially, the President, because it's key that you are a key partner in this process, and to use you and work with you in a more proactive way to make sure the national plans can work. It's not rocket science, you actually need the local parliamentarians and a group of them to come together to make this and move this forward in the way that we need. So thank you very much for that. Let's see what reaction we get to your proposal, because actually time is running out, and we actually need you to make the comment that, as you say, a much more aggressive and participative approach from parliamentarians. We have Matthias. Hello.
Hi, good morning, and thanks for this very interesting discussion. I'm Matthias Strömering. I'm the chief Swedish climate negotiator. It's been very encouraging to see how the concept of green recovery has been gaining ground so quickly, rather, for the past couple of months. But just sort of to bring also a global perspective into this, a bit of a concern that the concept of green recovery is a very European one. And sort of we should be proud, and we are proud of the kind of this policy proposals being put forward and the action being seen, both in terms of the Commission and the member states. But it would be interesting to hear also perspectives sort of from how do we make sure that this concept is also a global concept, and that we can make sure that sort of supporting countries in implementing green recovery measures in countries globally to ensure a more ambitious implementation of the Paris Agreement. Thanks.
Thank you, Matthias. And perhaps I'll turn to Alberto for a response to that, because as he chairs that, as he mentioned, that network, the C40 network of companies, etc. But before I do, Alberto, we have a couple of questions on Twitter. So my colleague, Charlotta.
Hi, Amanda. Good morning, everyone. So we have a question from our online community regarding the billions of euros that have been injected into fossil fuels and polluting airlines to save the economies from the current crisis. And the question is, what should the European Union do to stop this investment?
Okay. Thank you very much. Fairly straightforward and direct question. So first, can I just turn, Alberto, can I turn to you first on that question about this, this very green, very European concept of green recovery and the traction it has elsewhere, as Matthias raised. And then I'll come back to Artur and Irene to respond to that question about, saving and supporting and subsidizing polluting companies. Alberto, first to you. And perhaps you may have a view on the polluting question as well. You never know.
Yes, I have, but I leave to...
No, don't hesitate. But can I ask you to just move forward so I can hear you very clearly?
Well, yes, it's a very, very, thank you, Matthias. It's a very relevant question. I answer in two ways. I think that what we are doing in Europe is relevant for the world, because I think that creating conditions in which a new economy works properly, and not talking about at the end sustainability, talking about the new economy, the way is something that will spread around the world. And this is today, so Europe is leading, and I think with this effort that we are talking about, in which I'm proud to be part of this Europe, the Europe that is trying to lead the new economy, is spreading around the world. We work in a lot of countries in the world. We work in 35 countries in the world. And I would say that now the concept is within the economies, within the business choices. And this is exactly so what we have to do, create conditions, because it's within the business choices of companies. It's clear that some part of the world need other kind of instruments. I'm thinking about Africa. We work a lot in Africa. We have a lot of renewable installments in Africa, and we are developing Africa. It's something in which so a more structural aid, not only in terms of financing is needed, but also conditions, regulation, fair regulation, all the aspects that related with so a fair development is needed. On one side, and on the other side, it has to be clear that this moving is not a threat. I'm fully agree with all the Just Transition funds. So we also, within our company, we are making Just Transition funds with our employees, because it's something that has to be made very careful, because so it could be an obstacle on the speed of growth. But at the end, we see, and we have to clearly make a narrative of that at the end of this path, this is a benefit for everyone that will be involved. So a mix of all these things is relevant to move the world. In the United Nations Global Compact is exactly what we are doing. And I'm not saying that it's easy. We are still speaking different languages. But the economy languages, the fact that at the end, this will create economical and social value, is the right way to have a common language.
Thank you. There's something about the fact that it just seems too good to be true. NL, you obviously, there's a leadership here that's obviously making waves, and it's lovely to hear you saying the things that you're saying, which we wouldn't have expected from the private sector, and at least not in the past 10 years. But it's good to hear that. But that sense of how you help lead the pack, but also bring others together is going to be key. I want to go to Artur and then to Irene regarding the question of, you know, subsidizing or bailing out polluting companies, etc. Artur.
Yes, and that is, I think, is a very important question. And I think what we are faced with is that these are also industries, as Irene was saying, that provide many jobs in Europe. And economic activity, and they are central for other businesses. If you think of airlines, particularly, it's the tourism sector, and as you know, there's many small and medium-sized enterprises that are being involved in that in many parts of Europe. So I think the first amounts of monies that member states gave to their airline industry is to make sure that you keep these airlines afloat. Kind of they are not going to crash because of no liquidity, and that they can make sure they can keep the workforce instead of laying them off. And these were immediate measures that were absolutely necessary. When it comes to new investments, because I think the airline industry will also have to look at their bottom line, the first thing that springs to your mind is getting to a new fleet of much more efficient planes. Because that can reduce, on one side, the bill for the airlines, because fuel is one of the biggest shares of their bills. And at the same time, it will help climate. And then, of course, in the Commission, we are also looking at the medium and longer term, and that is replacing those fossil fuels with other fuels, with sustainable alternative fuels. And there is regulation on its way in order to push this forward in the coming years. But that is a process that will take the next 20 to 30 years. That's not being done overnight. I think that's the way we would look at it from the side of the Commission.
But you know, it kind of sticks in the throat for the citizen that there's been that bailout, if you like. And what it's revealed is the shocking state of the balance sheet for a lot of these companies. And the lack of, like, you know, having that kind of let's say shock absorbing capacity in their balance sheet, but also not prepared to give up its shareholding and those who, you know, gain from shares. There has to be a different approach, surely, and a different regulatory and governance approach to the private sector, so that actually we don't have this shocking state of balance, you know, balance sheets, but also the fact that the profit sharing that takes place has to have a public gain aspect to it, surely. Irene, over to you. And I will, Artur, if you have a point on that, please don't hesitate to come back. Irene, your response to what I've just said, but also the question raised by our people on live stream.
I think Artur said it very well. I mean, what the situation is. So it's not as much about subsidizing a polluting company. It's about trying to make sure that we don't have a broader collapse of big chunks of our economies. At the same time, we link this aid and we support these companies in the transition. Of course, sometimes the transition takes some time. Sometimes the technology is not right there. Sometimes the infrastructure is not right there to be able to make the transition like in 2 months or in 3 months. Sometimes in certain industries, it may take years. So we need to guarantee some continuity so that the whole industry does not collapse whilst trying to make the transition. Because what would happen is, Artur explained it very, very well, is that you could have thousands of hundreds of jobs of small businesses, like the airlines affects industry, the tourism industry, for example, which, you know, is made by tons of small businesses which are actually now in terrible navigating terrible waters. So we have to be very careful, because otherwise the risk that we are running is that the green transition and the sustainability becomes something that people perceive not anymore as an opportunity, a positive opportunity, but it's something that is negative for them, and this could create reactions. A little bit like what happened when we opened up our economies for the globalization, which I believe is a major positive improvement, but for some people happened too fast, and we were not able to make the transition smooth enough for some people, especially the middle class, and this turned out to have a reaction against globalization, against the European Union. So we've seen that. So we don't want to make that mistake now. Of course, we want to achieve our objectives, but making sure that nobody's left behind or suffers too much, that we can be able to make this transition all together.
Irene, thank you very much. Astrid, I just wanted to ask you if you want to make a kind of final comment or reflection on what you've heard so far. You don't have to, but I wanted to invite you to, if you given what we've heard so far and the questions that raised, some very final few comments from you.
Yeah, thanks very much. I mean, very rich discussion. Maybe one quick point on the last question. I mean, I fully appreciate and agree that crisis management measures differ during the short-term stabilization phase and the medium to long-term recovery phase. That being said, it is taxpayers' money that has been or is being used for these bailouts, and I think it's actually fair to at least ask those companies that they commit themselves to sustainability strategies and alignment with net zero over time, and that is becoming a condition of bailout. So I would like to see a bit more ambition in this context, because otherwise we are locking in unsustainable industries and create stranded assets, basically, which is economically disastrous for public funds. And then just maybe a couple of points on some of the important topics that have been mentioned by others. First of all, your point in needing to improve the top-down, trickle-down effect between Brussels funds, EIB funds, and then, the final citizen, wherever they need to renovate their home, for example. I think we need to collectively do a lot more work on this. We need to make sure that, EIB, who channels a lot of this funding, collaborates very closely with national promotional banks. We need to train national commercial banks to help them understand the opportunities. We need more investment in technical assistance for project preparation. I think that is certainly insufficient at the moment. And we need to crowd in more private sector, for which we also need new instruments, not just guarantees, but I think the funds should also provide equity finance and risk capital in order to do that. And last but not least, on subsidies for the private sector, yes, there may need to be incentives for new technologies in areas where risks are unknown, because those risks is not something that the private sector can manage, but we need to be very careful that we don't subsidize for perceived risks, but we subsidize for actual risks, and we are not distorting markets as well.
Astrid, thank you very much. Thank you all. It's very clear that there's a very sophisticated jigsaw puzzle here in terms of the financial market and what the institutions will do, what the private sector will do. And I don't think we should underestimate the job at hand in terms of creating a different kind of infrastructure that's more agile and ready to get to the ground. But that's a topic for another debate, I'm sure. I want to make sure that, thank first our audience, our Zoom audience and our live streamers. Thank you, because without you, this wouldn't make worthwhile. I want to also thank our speakers, Astrid, Alberto, Irene, and Arturo. Thank you all for being with us. This topic isn't going to go away. This is going to come back and it will continue, and it has to. But we can't underestimate the politics of it, but also the fact that it's really important. This is what I was saying in our conversation with Kristalina Georgieva at the IMF, who we spoke to this week, that what we need is a new narrative, or a consistent narrative politically, that's simple, that's understandable and communicated to the citizen in terms of how we're trying to move in a way that will protect the safety of their lives, but also their livelihoods in the future. It's a job that we all need to do. Thank you all very much. Keep online with us in terms of our website, because this conversation is going to be writ large in our annual State of Europe roundtable, which is online from the 12th to the 15th of October. So please do join us in that time and look up the kind of topics that we're going to be covering, but this is going to be writ large in there. Thank you all very much. Have a lovely day, the rest of the day, and thank you for being with us and engaging with us. Take care, mind your distance, and be safe. Bye-bye.
so